Okay, today we have Kyle Floyd, CEO of Vox Royalty Corp. Thanks for joining us, Kyle.
Absolute pleasure to be here. Thanks for having me, Sean.
You're welcome. So you own a royalty company, which is different than a typical mining company. So let's start with the differences.
Well, the big difference is that we take a percentage in the top line revenue generated from mining companies. We don't actually operate the mines themselves. And so we have a unique position in terms of how we generate revenue into our business, and that is derived off the revenue generating capabilities of mining companies, which comes along with a lot of benefits to the royalty company, and we can certainly unpack that.
Okay, we'll get into it some more. So give us your background.
So my background is I previously ran the mining investment banking unit for a company called Roth Capital, and we served a generalist audience in terms of investors looking to invest in mining companies. Ended up going back to Colorado School of Mines, and then put together this concept of a royalty company that really synthesized what we believe is the best performing asset class in the entire commodity sector, and taking the best aspects of those businesses and putting them into one and focusing on that for investors and predominantly generalist investors that wanted exposure to commodities. And so Vox Royalty Corp was created to solve the problem of, I'm interested in commodities. I don't necessarily have the experience of 2 mining cycles, and I'm not a mining engineer, and I'm not a geologist. How do I get the right kind of exposure in this sector? And that's the problem that we think we're solving at Vox Royalty Corp.
Excellent. So tell us about your team and kind of how they are different and the differentiator for the industry.
Well, we have a fantastic team. It's a purpose-built team to focus on buying royalties. So we buy third-party royalties. So we don't finance mining companies. It's a big distinction between us and a lot of the other companies in our royalty industry, is that we're actually looking for individuals that own royalties on projects. Sometimes that's companies, sometimes that's individuals, sometimes it's the prospector that originally had the geological discovery. So those are the groups that look for buy royalties, and it's a purpose-built team to find those assets and evaluate those assets. So on the front lines of our business is mining engineers and geologists that really understand the technical aspects of buying mining assets, specifically royalties. Our team has been involved in over $1.5 billion worth of mining royalty transactions. Almost each member on our team individually, there's 6 key senior professionals have been involved in the royalty sector for 10 years each. So we've really grown up in this sector, we've really focused on this sector, and we've built a lot of competitive advantages around finding great royalties all around the world at great valuations.
Interesting. So what percentage of your royalties are from you approaching companies, them approaching you, versus acquisition?
So almost every single one of our royalties is in bilateral situations. So that's us approaching the holders of these royalties versus usually holders approaching us. Sometimes that does happen, but we're essentially on a treasure hunt around the world looking for interesting mining royalties that we can find it at valuations that make sense for our shareholders on assets that we really like. And so we have one of the most significant intellectual property databases around third-party royalties of really in the industry. It's almost 9,000 royalties in the database that helps us look for great assets that have interesting developments, and then go look to see which of these projects have royalties over them, and then who owns those royalties. And then at that point, we're approaching the holders. So that's generally how our business operates and how we go about finding value for investors.
Interesting. So where would you put yourself against other royalty companies, kind of junior, or what would you say?
Well, it's interesting. It's a great question. We've been around for more than many of our comps in the industry. So I founded the company in 2013 and went about building this business model to really synthesize the quality of royalty companies and stay disciplined around deriving that and delivering that for our investors. And so it's interesting in that, we've been around for long. We haven't been public for longer than most. We've only been public for 2.5 years. So we're still early days in terms of our investor awareness and really exposing investors to what Vox Royalty Corp is doing. But in terms of where we are in the fundamentals of the business, we're farther ahead than a lot of our competition in terms of number of producing assets, number of royalties in general, certainly delivering return on invested capital. We're within our peer group, we're really at the highest end of the spectrum for those metrics.
Okay, let's get into some of the royalties you do have. How many? What are kind of exploration versus producer?
Sure. So Vox Royalty Corp, about 60 royalties to date, 6 of those in production. When we went public in May of 2020, we told investors our focus is finding royalties 2 to 3 years out from production that our technical team, our mining engineers, and our geologists feel really good about. So went from one producing asset, we said what's in the portfolio is going to become revenue generating, and we're able to buy pre-revenue assets at very good valuations. A lot of investors, rightly so, were kind of skeptical about our abilities to find really good royalties that were pre-production and then have our technical analysis prove out right and our diligence prove out right, and that's happened. And so we're at 6 producing assets now. We expect that to be double digits as we exit 2023. That's also corresponded to record quarterly revenue growth, exponential growth in that category, and ultimately free cash flow positive. And today, it's great timing for this, we just announced our inaugural dividend. So it's imperative to us that we return the capital back to the investors. We're still going to leave enough to continue making accretive acquisitions. But so in those capacities, we believe we're really excelling and setting out to accomplish what we wanted to for investors, which is the right kind of exposure to commodities.
Excellent. Well, let's get into your shareholder mix so the audience understands.
We're very fortunate to have a great shareholder mix. So we have everything from the who's who of gold bugs and mining focused funds to a lot of generalist funds. So on the specialist side of things, Gold 2000/Conwave is one of our biggest shareholders, one of the most, I would say, respected gold investors on the planet. And then we have a lot of generalist funds out of the US that have taken some small positions, but are looking at our company very closely because we're offering, they believe, the right kind of exposure. It's our mining engineers and our geologists doing the right kind of work on the right kind of assets that leave us in a really unique position. One of the themes that investors really like about Vox is because we're only taking top line revenue. We're not actually operating these mines. We don't have operating cost inflation exposure. So we're seeing that really play out with mining companies where metal prices might not be running as aggressively as many had hoped in the industry. Unfortunately, costs are. And so the fact that we're able to take a top line revenue percentage in these assets without any sharing of costs or contributing to costs has helped us maximize our margins and produce very, very healthy profit margins in a period of time when a lot of the mining company, a lot of the industry is under really a lot of margin pressure and margin contraction. So that's a unique part of our business model that's resonating with investors right now. Yeah,
I think that's excellent. No matter it's a boom or bust, kind of you can be profitable.
Yeah, I mean, our business was built to be really less volatile for investors, but also keep that long-term optionality and that long-term upside. So we're building a business around present and near-term cash flows, but also building a business that has really significant optionality should metal prices go higher. We actually, as a team, I think it's important to note, we forecast backwardation. So that means metal prices actually declining, where a lot of our industry certainly focuses on metal prices rising in the future. Our ability to find assets that are going to make money at lower metal prices than today means we're finding very good assets that have a lot of leverage if in fact metal prices go higher. But that's not what we build our business around. We build our business around generating returns for investors around a lower metal price environment. And so that really lowers the risk. You overlay that without having operating exposure and the cost exposure alongside a significantly diversified pool of assets. And to top it off, most of our assets, most of our royalties are in Western Australia, which we, a little bit biased, but believe is the best mining market in the world to both discover, develop, and ultimately bring a mine into production with some of the best geology on the planet. So we're excited about where our portfolio is, how we produce opportunities and generate results for our investors. It all kind of comes together in a nice box.
Sounds like a great package to have.
It is. And the key in our space right now, the royalty sector being a niche within the commodity sector, is how do you find value for investors? There's multiple different royalty companies out there. But for an investor, I think it's important to understand, what does this royalty company do for me? What does it do for my portfolio? How do they go about finding value for shareholders? And how we're able to do that is we have essentially the roadmap to where some of the most interesting royalties exist in the world that our competition usually doesn't know about. And so you can see that in transaction after transaction after transaction that we've been able to acquire really good value, where our mining engineers, our geologists really like those assets, bring those into the portfolio, and then let those build and crystallize in value for our shareholders. And that's played out consistently and really validated our ability to find value for you, the investor.
Excellent. Some people have recession fears, and I think you need maybe to discuss the leverage you may have if some exploration companies get in trouble. You have right to title based on royalty in many royalties?
So a royalty typically runs with the asset. There's very few circumstances where a royalty would be extinguished. It does happen, but it's very, very rare. And if you pick the right projects, there's so much value, even if an explorer runs into problems. very rarely are they relinquishing their tenements. That's kind of the one situation that would arise that could in certain cases vanquish royalties, but usually the royalty is essentially running with the land. And so operators can change hands, bankruptcies can happen, and our royalty usually maintains on the tenements and runs with the land, which means when it comes back into production, Vox is getting paid. And so that's, we talked about, we're offering a lower risk scenario to get exposure to commodities, but also still offering a lot of upside and a lot of leverage for mines that produce above expectations or meet expectations, and alongside that if metal prices run. So for investors looking for a way to get exposure with less risk, but really maintaining that upside, royalty companies like Vox, I believe, present a really unique opportunity.
Yeah, I'm very impressed. I actually didn't know about them until 6 months ago or so. So I think investors really need to take a hard look at this market sector. So let's get into, you obviously have a lot of strengths. What do you feel the company has maybe in some weaknesses, and how you're addressing them?
Sure. I think some of the weaknesses are actually, rather upfront, and we're upfront with what they are. One is that, we're still a small cap company. We're also on the TSXV, on the OTCQX. A lot of our peers in the industry, even, slightly larger relative size, have more liquidity. And I think that's important as you get into the institutional world. And all the institutions looking for liquidity, they like our company. They like how we're able to find value for them as potential shareholders, but would like to see further liquidity. And one of the ways that we're addressing that is we've applied for a NASDAQ listing. We expect that to be forthcoming in the near future. And for our comps that have been precedents going from the Toronto Venture Exchange to the NASDAQ, they've seen a dramatic increase in their liquidity. So I would say that's been one area of weakness that we focused on, and we believe that we're structurally addressing.
Okay, excellent. So let's get into some of the financials. Typically royalties have a good number of, a lot of cash, not a lot of debt. So where do you guys stand?
Well, we're in great financial position right now. So 44 million shares outstanding. Sean, we actually forward split the stock when we went public, which is an anomaly in the commodity sector. And we've announced a dividend today. So we're growing the cash balance of the company. We have no debt outstanding and an ability to continue financing royalty opportunities from the cash flow that we're generating. So I think we're in a very unique position relative to our peers in the industry. And I think that portends to strength for our investors and what we'll generate.
Excellent. So if you do need more funding, how would you go about it? Would you have banks, or you have a mining company behind you, or more shares?
Well, we certainly have opportunities to take on debt if we so choose. That will really be deal dependent. Our six-cylinder business, if you will, is finding great royalties, call it in the 250,000 range to a few $1 million range, and bringing those in at great valuations on great projects that we expect to really significantly outperform maybe what the expectations are in the public markets, and we've seen that play out. So our ability to keep financing those deals from cash that's coming in through the income statement onto the balance sheet is still very robust, but deal dependent. If we have the right type of larger deals that we believe are going to be accretive across all metrics, then in those situations we can go to the equity markets or we can go to debt. But we stand in a very strong position with very positive shareholders and very strong support from those shareholders, and then also the opportunity for debt. So it'll really be deal dependent.
Okay, that's interesting. Let's talk about when you already discussed a little bit. When gold drops, you're doing fine because of your positioning. Let's say gold drops 20 or 30%. What do you see the markets shaking out?
Clearly, that's going to be tough on a lot of the industry, and so it is not necessarily a positive for our business. But I think for Vox specifically, we've really cherry-picked and hand-selected assets that are functioning and will function at a much lower gold price and continue to generate revenue for Vox Royalty Corp and our shareholders. So, not to say that that wouldn't be unfortunate circumstances for the industry to see that type of capitulation in metal prices. But if there's a business that is positioned to withstand that and continue to grow revenues, I believe it's Vox. And so I think we're a very good answer for what is expected volatility in the markets these days from investors.
Okay, excellent. So readers get our audience gets an idea of what a royalty is. Give me some concrete examples of percentages with certain companies.
Absolutely. So we bought a 1.25% to 1.5% royalty over the producing Wanmuna iron ore iron ore mine. And so that's been a great one for us. We bought that royalty when we expected to be producing around 5 million tons per annum. And that operator is an $11 billion Aussie market cap conglomerate in that they produce from a host of different commodities. Very significant company. Us in North America would be less exposed to that great business. But that's a royalty that we have. And so what that entitles us to is 1.25 to 1.5% of the revenue that that operation, that specific mine generates. And so for us, that's great because, again, the benefit of owning the royalty and the royalty company is that we're not exposed to any of those ongoing costs to keep mining that asset. So we get a percent of the revenue. We're not on the hook for any more costs. When they go drill to find more tons or more ounces, we're not exposed to that. We don't contribute those costs, but we get the benefits of that additional revenue or additional expected revenue. And so it's really puts the royalty company in a unique position where we get the benefits from that potential upside that exists, whether that comes from commodity price appreciation, extending the life of mine, increasing the reserves. All of that comes to us essentially for free once we purchase that royalty. And so you see where you're seeing that play out consistently within our portfolio, where we're able to find assets pre-big catalysts and pre-big milestones where they're increasing that reserve life, they're increasing the production rate, and therefore increasing the revenue and the expected returns that Vox is going to generate. And so when you look at the financial strength of our business, it's really a product of great asset selection, and then in turn also great valuations that we've been able to buy these royalties at.
Excellent, Kyle. Let's get into, all right, so you said total 70, was it? Or
60.
60, okay, well, 70 coming, right?
Yeah.
Those 60 companies, what if they need some intellectual help, some brain power? How do you offer that? And is there any,
Sean, our business model is pretty straightforward. The fact of the matter is we're buying the royalties from third parties. So these groups have nothing to do with the operations of the company. So, for example, we bought royalties from hearing aid technology businesses, automotive parts businesses, and almost everything in between, prospectors that found the assets. So we're not going to the mining company and saying, hey, we're going to give you capital and you give us a royalty in return. Because what happens then is you're also kind of on the hook at that point for future information sharing, future asset giving essentially. So we don't provide any of that to mining companies. They certainly have their people that they use and their experts and their consultants. And so we're not contributing. Those are costs at the end of the day, and we don't contribute to those. Okay.
Let's get into kind of macroeconomics. What do you see happening in the market, and when's gold going to have its day?
I got to be honest, Sean, we're not a team of gold bugs. So, and I think that served us really, really well. We've seen a lot of this industry, have pretty strong feelings about where the gold price was going to go. And I'll tell you, you see that in the investment decisions they've made, both in the royalty industry and in mining companies themselves, and also for investors. And so I think the beauty with Vox is we're not really market forecasters. We're market takers. We take what the price is. We usually take some form of consensus, which is backwardation, lower metal prices, and we're picking great assets that are going to work at lower metal prices. So you, the investor, can have confidence that even if gold does go down by a material percentage, our assets should still continue to perform. And in fact, I would still forecast that our revenues grow. So when you're going to be looking at an industry that's dealing with some carnage and some wreckage from much lower revenues, the other good thing is that we're not just gold. Although 60 to 70% of our net asset value is precious metals, the reality is we're getting revenue from other metals, and that is helping diversify our revenue stream. So again, it's lowering that beta, or it's lowering that risk in the business and in the cash flows and future cash flows for the benefit of investors, but also maintaining that optionality and that upside that if metal prices do rip, we're in very good position to capitalize that for our investors.
Excellent. So what are some of the other metals that, other than gold and silver?
Yeah, so in the portfolio, we have a royalty over producing vanadium operation. So that's not yet producing cash flow to us, but we expect is in that kind of bucket of the next 4 to 6 royalties to start producing for us. Alongside that, we have producing iron ore royalties, we have producing diamond royalties, we expect producing copper here in the relatively near term as well, going alongside what is by most assets our gold production. So we have 3 to 4 gold assets right now in production.
Okay, excellent. So let's talk about the some industry insiders say the market needs to be consolidated. How do you feel about mergers, acquisitions, and being acquired?
I would generally agree with that sentiment. I think, unfortunately, the royalty industry looked like a very exciting place to be for new management teams and new groups that had probably watched it from the sidelines for a long time. The reality is you still have to have a niche that you can, and within that niche, a way that you can create value for shareholders. And I think, honestly, it's a little bit of a referendum on the industry. In some ways, it hasn't accomplished that for investors. But within Vox, we're very focused on return on invested capital and return metrics that truly do make sense for shareholders and our investors. And I think that's proving out in our business. But in terms of overall consolidation, I do believe it's needed. I don't think that most of the royalty companies are actually serving a purpose for many of their investors, where if there was some consolidation, I think there's some economies of scale and some synergies that would be good for the industry. In terms of Vox and where we fit into that, we believe we're dramatically undervalued. If you look at our latest presentation on the website, we traded about 0.6 times price to NAV. We traded about 6 times forward revenue to enterprise value. And that essentially, if you merge those two multiples, we're the cheapest royalty company out there today. And so is now the right time to do something? Probably not, to be honest. I think that we have a lot of room to grow and achieve ultimately a premium valuation for our investors because of our ability to continue finding value in what for most royalty companies is an extremely competitive marketplace. We're still finding great deals, bilateral situations, and finding value for investors that most royalty companies are simply just not capable of right now.
Excellent. I think that's a great scope of the industry, and it's very nice that you're being honest with the audience, which is great. So, Kyle, let's get into final thoughts. What kind of comments would you like to leave, or that we maybe left out?
Well, look, there's no secret that the market's extremely volatile. It's very difficult to be an investor with rates rising at the pace that they are, forecasts of a recession, if we're not already in a recession. And so, I believe that we're uniquely positioned to continue driving great fundamentals for shareholders, where most of the industry, both the royalty industry, the mining industry, and even, if you look at the macro economy, it's very difficult for companies to be really, I think, buoyant in terms of their projections and what they're able to deliver to investors. Vox is the exception. We are continuing to grow revenue. We've come out today with a dividend, our inaugural dividend, which we believe is very meaningful. We believe it's very sustainable, and we also expect that will be growing. And so there's a lot of strength in our business for investors. With the dividend, I think we're a great place to be if you're looking for a lower volatility but still maintaining that upside in a commodities bull cycle. I think Vox is a great place or a great company to look at investing in.
Great, Kyle. Thank you for your time.
My pleasure. Thanks for having me, Sean.